This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Need help in finding investors for your startup, fund, or angel group? 10 Capital provides funding as a service helping you find accredited investors. Contact 10 Capital to gain access to investors for angel and venture capital funds, family office rounds, and syndication raises. To learn more, go to 10capital.group. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Brad Aelicks, president at Pyfera Growth Capital Corporation. Pyfera Growth Capital is an investment corp specializing in investing in private technology companies with the near-term objective of accessing the public markets. Brad, thank you for joining us.
Oh, thanks for the invitation, Hall. I appreciate being here.
Great. So what was your background before investing in early stage companies?
Well, it's a bit of a varied background. I started out as a young geologist, actually, and a graduate from Laurentian University, and spent the first number of years in the industry working in the geological community. Had a fairly deep background in the sciences and management, which was an incredible eye-opener for an education as a sort of far end spectrum from a geological side of things landed me into the middle of the financial community. That was a twist that I didn't see. It gave me such opportunities, the entities, and raising capital for the various different ventures participated in technology side of investing and corporate opportunity. And I spent a number of years founding a startup called Napier Environmental Technologies that was a world-leading technology in chemical alternatives, mostly used in the chemical strippers and coatings industry, which was a great success. And because of that success, I was sort of bombarded with all kinds of different technologies that people came to me with to try to assist them in raising capital, and launched me into an opportunity to really review a number of varying technologies across a wide industry range. So I eventually exited Napier, founded a small merchant banking organization called B&D Capital Partners with a partner, Don Mosier. And we spent 7 years together raising capital for various different public companies, everything from the junior mining industry to oil and gas to technologies. And I had some great successes there. We raised probably in excess of $650 to $700 million for our clients during those years, and really developed a fantastic international network of investors and institutions that followed our deals. And then where I've landed now in the last stage here of my career is as founder of Pyfera Growth Capital, which is a very interesting new approach to investing in the capital markets. We tend to focus on early stage Series A or Series B companies with a slant to go public in the near term. And we try to put together a complete package for those companies to review their decks, upgrade their presentations, beef up their management if required, and assist in their funding, ultimately with a goal to assisting them to go public. And that's been very, very interesting last 5 years.
Great. So what excites you right now?
I think, the thing that really has me excited in the investing community right now, I just absolutely love researching and investing in the most exciting new and innovative technologies. And what has to be at the forefront, I think, for anybody that is out there looking for the new waves of momentum is the wave that we see building in sustainable and impact investing, now lately coined ESG investing, environmental social governance, all falling under these broad categories of investing in the new economy. All these things we see tied together. And that is what I believe is a massive new wave of opportunity that we're spending considerable amount of time on.
Great. So you see a lot of startups and investors out there. What's your advice for people investing in startups? What do you tell them to do before they write that check?
The first thing that I think people really need to do is to commit themselves to some diligence time. I know from the years that I've spent in the industry that a lot of people just really want to be told what to buy and when to buy it. And the reality is that there are so many tout sheets out there and things that are landing in your inbox that are promoting the next greatest thing. And I just highly recommend people to find something that interests them, be comfortable with your category, and to spend some time understanding, who are the leaders in the category, what is the shift or change in the marketplace that's going to create, a new opportunity for this early stage investment that you may be looking at, and then complete your due diligence on those companies of choice, looking, for strong boards of directors, good management team, and ensure that your company is well capitalized, because the best ideas out there really don't go very far without the use of capital.
Well, great. And then on the other side of that table, what's your advice for people running startups? What do you tell them to do before they go out to raise funding?
Well, Hall, we see a lot of them. When I founded Pyfera, in the first year, we looked at over 360 companies. And believe me, we saw everything from soup to nuts and companies at all stages of preparedness. And I think the one piece of advice, if I could share with companies ahead of time, is to make sure that, you're properly prepared for the capital markets when you go out to look for money. And that preparedness includes, ensuring that you have a properly structured board of directors. The stronger that you can make your team, even it's just from an advisory perspective, is very, very beneficial. It adds weight to your credibility. Make sure that you have a good solid deck that is concise with, the opportunity that you're creating for investment capital to come in, with a slant to describing your business and the overall target market that you're approaching. And ultimately, I think the key thing for me in conveying a message to startups is that you really need to respect the capital. People that are investing in startups have hundreds of opportunities to invest in all kinds of different things. But what's important is, really being aligned with the company. And that alignment can only come with management that understands and appreciate the value of other people's money, that is coming to help them make their dreams come true. And so properly structuring your vehicle, having an appropriate valuation at the time that you're asking for money is, I think, a critical thing to the success of continuing to attract capital to your company.
So let's talk about the state of investing. How do you see the industry evolving from here?
Well, if we go to spend some time on my favorite ESG and sustainable impact side of things and look at the industry from that perspective, it is just an absolute tidal wave of change that we're seeing in the last, let's say, 2 years. I founded Pyfera 5 years ago, and we started looking at impact and sustainable investing. And, those were the buzzwords of the day. And nowadays, everything is kind of lumped into this ESG category, environmental and social governance. And I think it's important for investors to really get a grasp on how important this thesis is. we're in an environment right now where the change to environmental investing is sweeping through not only the investment community, the institutional, the brokerage community, and retail investors are all starting to onboard, participation in these new opportunities. And the reason that it's, really catching fire is because the industry is also being pushed by the other side of things, by government mandated changes in legislation. And those changes are forcing the old guard industries like the oil industry, the coal industry. You can look in the chemical industry, the plastics packaging industry, clean water, battery technology. This new economy investing is a sweeping change of opportunity from literally trillions of dollars of established old guard industries, which are being mandated to change. And that change can come from those old guard players. And many of them are doing what they can to shift modestly in their businesses. But there is complete disruption coming in some of these sectors. And, just to, pick one in particular, if you look at single-use plastics, there is a phase-out ban on single-use plastics coming across North America and Europe and all over the world. And in North America alone, you're looking at a $980 billion a year industry just in single-use plastics, which is on a phase-out schedule. So if you look in some of these sectors, whatever grabs the investor's attention, whether it's, identifying, these massive markets in a switch out of plastics or packaging, or whether you're interested in new battery technology, the EV market for the electric vehicles, solar industry, all of these things, these opportunities are disrupting the old guard. And, we're literally talking about trillions of dollars of opportunity in some of these new companies that are coming with new technologies. And that's what I see as a massive evolution right now, and what really has me excited about our investing thesis.
Great. And so what do you think is the biggest change we'll see in the next, say, 12 to 24 months around ESG? What's going to happen first?
Well, I think what's happening is the biggest change is that companies, as classified as startups, which is what we're supposed to be focusing on here today, have really had a limited access to capital up until, the last 2 years, really. When I founded Pyfera 5 years ago, we founded it on the basis that a lot of these new technology companies had access to only a friends and family round. And then beyond that, if they were successful, they were really coaxed into going public because there was no other interim capital available. And that was kind of a recipe for disaster, because a bunch of these companies were encouraged to go public a little bit too early. And so their business plans were and operations were not at a stage to sustain, their share prices, and became a challenge in the marketplace. The biggest change that we see now is that there is capital available for these good ideas at all levels. And it ranges right from the seed level with new venture capital funds all the way through to, your early stage cash flow and production opportunities. We're seeing institutions all over the place, starting to spin off these ESG based funds. And we're not talking about small dollars here. These are $200 million to $2 billion funds that are now looking to find, opportunities in the leaders of this new world economy. And that is really encouraging from a perspective of even the smallest investor, because it just gives you the comfort level that if the story that you've chosen to invest in is successful, the management is going to have a live audience to hear their story that's willing to invest in the next higher level and the next higher level. Whereas, 2 to 3 years ago, there was a lot of really good stories out there, but there wasn't critical enough mass in the investment community to support a decent bid in the marketplace. So that's really the biggest change that I'm seeing.
Great. So what's your criteria for investing in a startup? What exactly do you look for?
I'm definitely looking for two things. We need to see an opportunity for advancing the company's business model, whatever it happens to be, if it's a production of a gadget or if it's implementation of a technology, it needs to have some near-term commercialization. So that's very important to us. We have invested in the past in earlier stage things, but those earlier stage things just take a long time and your capital is tied up for too long in many instances. Sponsoring these things for 5, 6, 7 years before they get around to cash flow is not a good use of my capital. So we're looking for near-term commercialization, seasoned management teams that are really looking to disrupt established marketplaces with new advantageous technology or new things that are going to fit into some sectors that are being disrupted, possibly by government legislation, or just a new movement into battery technologies and these type of things that are all catching big waves of momentum right now.
Great. So what do you think is the main challenge startups face in today's marketplace?
The challenge is standing out from the crowd. The more money that's available in the marketplace, the more companies that are coming to market, and they're coming quickly. That's one of my challenges as an investor, is to not just see a good story, but to try and understand who else is playing in that field. And I really think that companies with new ideas, one of the very first things that they need to do to protect their own capital that they're putting into their company and driving down the road is to try and understand as much as they can what else is going on within their industry. Who are the players? What is the other players' angles to market? Who's being successful and who isn't being successful? And try to create a unique positioning for yourself and your company on your way to success.
And then what's the challenge that investors face in today's market?
I think it's very similar. My biggest fear is not knowing what I don't know. I see so many stories. I see a lot of opportunities out there. But the one challenge that I'm always faced with is I'm just an independent, individual who's trying to learn, just like everybody else is in the investment community, on a lot of new technologies and where these opportunities fit in the marketplace. And it really is limiting to try and understand. You find a company in your backyard, but who's doing what on the other side of the province or the other side of the country, or in the, for us, what's going on in the US, such a massive country and in so many hotbeds of technology, what's happening in Europe. And that's the biggest challenge. And so I think it's important when you're talking to companies, and I definitely encourage investors to speak to management, no matter what the size of your investment is. Take the opportunity to speak with the seasoned professionals at the company you're about to invest in and ask them the tough questions about their competition and just try and get a lay of the land for yourself and make sure that that management team understands who they're competing against and how they're going to stack up against the competition.
Great. Well, you talked about the ESG segment. If you had to pick one or two sectors or applications in the ESG world that you think are good opportunities to pursue today, what would you put at the top of the list?
Well, the number one opportunity that I've really rolled up my sleeves on recently is a company called Evan-S Packaging Solutions. And Evan-S is a company that is in the alternative packaging category. And once I started to learn about, these opportunities, I was just flabbergasted really at the size and magnitude of the industry. $980 billion a year in single-use plastics and packaging. And to understand that there are very few players of size or magnitude that have viable solutions in that industry. And the reason that there are so few is that the alternatives are quite costly in comparison to the incumbent, which is plastics. Plastics is such a massive industry, and the oil industry is so proficient to producing the raw materials and breaking, cracking the natural gas and cracking these oil fragments down to be able to produce the chemicals that are needed in all of the different phases of plastics and nylons that are in the market today. That it's a tough challenge for some new technology to come to market to beat up on the incumbent from a price perspective. And so when I found Evan-S, I was really quite enthralled with the opportunity because they have two different technologies. One is a complete alternative to plastics, which looks and feels just like plastic, but is 100% compostable, fully certified compounds and products, and has the opportunity to launch into this market in a very significant way through individual channel, and that being, replacing plastic straws. And that leads its way into some of the most significant clients and opportunities in the packaging industry that will lead to the replacement of plastic cups, clear cold cups, lids for those things, cutlery, the alternatives with compostable bags and compostable food wraps. It's really a massive phase shift change in materials that is coming into this industry. And so Evan-S is one that I particularly love. We've participated in 3 different rounds of financing right now. We're just closing off a $8 million funding round with them, and we will be taking them on a go public path here over the next several months. So really excited about that opportunity.
Sounds fantastic. So in the last few minutes that we have here, what else should we cover that we haven't?
I think from an investor perspective, there's so many categories. I think really looking at something that captivates your interest, that you have some knowledge or interest in. And, these things include everything from the solar industry to CO2 abatement, production of hydrogen. We're seeing a massive move into new energy materials. So that's going to include hydrogen and battery technologies. And we're really focused on trying to pick leaders, 1 or 2 of those in each of those categories. So, we have a couple of opportunities that we already have public. Graphene Manufacturers of Australia, GMG is the trading symbol. We brought that public in February. Just a fantastic story on graphene, a new way to create graphene, and then using that graphene to create end products, one of which is a brand new aluminum ion graphene battery that uses, none of the traditional metals, lead or the new age lithium, nickel, cobalt. It doesn't use any of those. So, very exciting from that perspective. We're also have invested in Pond Technologies, which is a corporation that has a CO2 abatement and can take carbon dioxide right out of the waste stream from manufacturing facilities and turn it into high value nutrients, into either clean diesel, even food grade additives for the animal industry. So there's just so many neat opportunities in the marketplace. Even a recycling side of things, I invested just a week or so ago in a company. The symbol is Roof. And these guys have a technology now that's just focused on producing, or rather treating, asphalt shingles that come off the roof and are one of the largest contributors to landfills in North America. And yet there is no real solution out there. And these guys have come up with a pyrolysis technique that literally it just kind of melts away the asphalt shingles and allows you to recoup your fiber and your aggregate material and the carbon black from the tar compounds, and resaleable directly back into the same industry. So they have countless end users for the same material. So, just so many opportunities out there for investors these days, some of which now are already public and look to have very bright futures.
Great. So how best for listeners to get back in touch with you?
Well, we have a website that I think will be shown in the show notes, pyferacapital.com. And there's a section there that you can send an email to, or if preferred to use a direct email, it's just my name, brad@aelicks.ca. And I get a lot of spam emails, so please identify yourself as investor questions or investor interest in the title of your email. And I'll endeavor to read any of the above and provide either advice, or if people are looking for opportunities in, specific sectors, if I see something come along. We definitely are trying to build a network of co-investors. As an example, our fund is a relatively small fund in the 5 to 10 million range, but just with our co-participants, people that co-invest alongside of us, we've raised in excess of 70 million in the last couple of years for the various different ventures that we get involved in. So we are open to spread the word out there to others that are interested in the same themes and beats as ourselves.
Great. We'll include in the show notes your contact details. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks very much, Paul. I appreciate being here.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.